Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast. This is Wednesday, December 17th. We're recording. Podcast will likely come out Wednesday or Thursday, December 18th. You got Ian here, joined by David as well. David, good to be here with you.
Glad to be on. And we were actually just talking. This is going to likely be our last podcast of 2025, which is hard to believe 2025 is almost closing out, to
Yeah,
be truthful.
it's crazy. It sneaks up on you, that's for sure. We're looking at it next week, Christmas, week after that, New Year's. Probably we'll let this one kind of round the year out. It's certainly been a lot to talk about this year.
Yeah, definitely from especially a lot within equities, um, international and domestic. But I mean, it feels like almost every quarter there was a different story that everybody was sort of getting onto with domestic equities or whatever the market environment was giving us. It was sort of a roll with the punches type year.
Yeah, for sure. Definitely, I mean, eventful year. Maybe not as eventful as a lot of people expected after the first like 4 months at Terror
Hmm.
Tantrum and everything. Things kind of settled down and kind of got back to normal. But for today, since it is the last podcast of 2025, we wanted to have our kind of charts of the week focus on what was the most visited symbols on our research platform throughout 2025. We won't go straight 1 through 5, or we won't just hit on what was the top because might be a relatively boring podcast. Maybe not. I don't know. But we can get into some of that. Look at some stuff that wasn't too surprising. Some stuff that was surprising that we saw a lot of people clicking on. There were a few interesting themes I think that kind of broke out there. But maybe David, to kick it off, what do you think was the most visited chart on our site just by number of users visiting that chart?
Well, I mean, it's got to be one of the Magnificent Seven for sure.
Yeah.
I mean, my initial thought would probably be like Nvidia or Apple.
Yeah, I mean, Nvidia, Apple are the top two. So I mean, Nvidia, as anyone besides would not be surprised. I think whenever you go, and we have that symbol cloud at the bottom of the report that kind of shows the bigger the ticker, the more clicks it's seen over the last 30 days, right? NVDA is always the biggest ticker in that
Hmm.
thing, and it makes sense. I mean, Nvidia, thousands of users accessed it. It was the only one who eclipsed 1,000 users accessing it in 1 week so far, or throughout 2025. I guess we could see something else take that cake over the last couple of weeks, but unlikely.
Well, when you first mentioned that view of 1,000 clicks, I was like, "Wow, we had 1,000 users look at it throughout the year," and you were like, "No, that was in 1 week
Yeah,
early in this year."
in a few days. Seen a lot of movement.
Like, oh,
Yeah,
wow, okay.
unsurprisingly, it's seen a lot of stuff. And it really, when you look at the top like 10 names, most of the top end are names that you would expect, right? I mean, you have
Hmm.
your Mag 7 represented there as some of the most clicked on names throughout the platform. NVIDIA, Apple, like you said, up in there in the top two. You got Tesla, Amazon, Microsoft, all up there, right? All seen several thousand clicks throughout the year. Not surprising. We've seen those names are the biggest names. They've moved around a lot. They're always in the news. Not surprising people want to check out their charts and see what's moving around. One of the more surprising ones, at least maybe a name at this point last year, you might not have expected it to be the most clicked on name. This year, Palantir, right?
Right.
PLTR. Third most accessed chart, any chart on our platform in 2025. You were saying that was one that was kind of surprising to you.
Well, honestly, it's one of those things that I felt like we were getting a lot of questions initially about it in the beginning of the year because it had done well in even 2024,
Yeah.
and had definitely gotten some advisors talking about it. But it was like as soon as summer rolled around, that was in the rankings with NVIDIA, was probably the one we felt like we were talking about the most. And, I guess thinking, all right, sort of back half of the year, that's really when most people got on board with it or paid attention to it. So definitely surprised me a little bit to see it up there as top three, but clearly quite a few people were even seeing it before the crowd, if you will, saw it, with it being in that top three. But
Yeah, I
being
mean,
up over 100% also helps.
yeah, absolutely. I mean, it started off the year down in the 60s, I believe. Actually, it started off the year in the 80s, fell down 70s, 60s. A little bit of back and forth action throughout the first few months. Sharp downturn, like a lot of names in that March, April timeframe, and then just kind of off to the races. Like you said, the stock's up 140% at the time of this recording. Now we are seeing a solid pullback from Palantir today. Well, solid's relative term. Down about 4% at the time of this recording. Not going to lead to a signal change on the chart. Certainly could see the change by the time the podcast comes out. But I mean, it's had a strong year. You've seen some consolidation really throughout the heading in end of September into October, a wide range, but a range nonetheless. Consolidation in that kind of the upper 100s, let's say.
Yeah. And
I mean,
really, at this point, you're starting to sort of see that begin as the year caps out, settle around that 50-day moving average, sort of the middle of that trading band, at least as we're recording this. We still have 2 weeks left, so we'll see what transpires. But is interesting to at least note that it's sort of coming around that middle of the trading band, at least for the time being.
yeah, absolutely. And when you get a name like this, I mean, it's moved around a lot. Default charts move when the price adjusts over different breakpoints. You look at Palantir, it has an R risk score, a reading 6.29 based on market action through Tuesday. R risk, not to be confused with relative risk, is or reward to risk, right? R
Right.
risk is that reading essentially a standard deviation comparison. It looks at your 3-year trailing standard deviation of the security based compared to the 3-year trailing standard deviation of the S&P, saying how much more volatile is Palantir versus the S&P? 6 times more volatile, right?
Yeah.
So when you get something that moves around that much, a lot of times I like to change the chart up. You look at like a percent chart based chart, like a 2% scale. Things look a lot more consistent. You look at string of consecutive buy signals from March up really into October, all-time highs in November, and you see that kind of consolidation point more defined there in the 150 to really 200 range.
Yeah.
Um,
Not seeing it quite as choppy.
Right. It's smack dab in the middle of its trading band right now. I think overhead resistance kind of points that you'd be looking toward above 190. That kind of 190 to 193 range would be overhead resistance. In terms of support, I mean, from here, maybe some support around 170, 172, and then you're looking down to the 150, kind of the bottom of that range. Is kind of further support from there. As we look toward 2026, it's crazy to say. But yeah, Palantir, definitely a name. Surprised a lot of people throughout the year. And certainly it's kind of surprising to see it in the top end there. When we're looking at some other areas that were also surprising to see up in the list, I mean, when you're going down the list from there, like you said, you got Tesla, Amazon, Microsoft, but there were some names that snuck into the top 20 that were a little bit surprising. A lot of tech communication services names up the top end, but there's some healthier stuff in there too, right?
Yeah, which sort of left both of us going, well, that's interesting. Healthcare's not been the best performing sector, even close
Nope.
to it.
Seen a
Nowhere even.
rebound over the past few weeks, but
Hmm.
um, it's a few names in there got clicked on or accessed pretty heavily throughout the year.
Well, and one of them was United Healthcare,
Yeah.
but I think the one that probably was more interesting to the two of us in terms of how its technical picture looks, especially coming towards the end of the year and how it's looked most of the year, is Eli Lilly,
Hmm.
LLY.
Right.
Currently a 5 for 5, or had improved up to that during November. It did go through sort of, one of those consolidation phases, maybe a rather extended one, beginning in
Hmm.
2024,
It seems to be a
but
theme.
finally broke out here
Yeah.
in the summer, sort of that late summer months, and especially here in November, have seen it move above really kind of a level of resistance in the $900 range that it sort of developed. But at this point, as far as looking at any one healthcare name, that's among the better charts for sure.
Yeah, yeah, absolutely. I mean, you're looking at that name, they're out of the drug sector matrix. So we look at 48 stocks, it's 11th. So it's in the top quartile, at least at the time of this recording. 5 for 5, or like you said, a little bit overbought. I mean, we've seen it's like you said, it's a real sharp improvement in the fourth quarter, consistent improvement.
Hmm.
Let's let it into a little bit overbought territory. It's not as overbought as it was, though. It's still back from all-time highs. Could be an interesting name. I know the drug price conversation is in the news a lot these days. So
Hmm.
think that'll be interesting to look at when we're going into 2026.
Well,
Um,
prices of everything are
Prices in general,
and there's
but I meant the
that.
drug prices in particular and how it affects another interesting deal. I mean, its all-time chart high, 11.25.25 was one 1,111 and 11 cents.
Oh, 11, 11, 11,
A
11.
lot of 11s in there. Yeah, I
Yeah,
thought those were
I
close the first
tongue
time I
tied all
looked at
that
it.
trying to
I
say it
know.
so
I take a pause there.
fast.
Probably not the best for the podcast, but I think it looked like a lot of interesting stuff going on with Eli Lilly. And it is a little bit frothy here. Some other areas that are also surprisingly frothy. I think, would you be surprised to know that, I mean, markets are still at all-time highs? I mean, as we're entering the toward the end of the year, a couple weeks left. We've seen some pullbacks. We've seen some tech names pulling back, but we've seen the S&P Qs within a few percent of all-time highs, and you see the S&P, SPY, and QQQ were some of the most clicked on ETFs throughout the
Yeah.
year.
Yeah, I mean, it is one of those things that especially I feel like at some point in any given year you sort of run into these bouts of uncertainty or these bouts of, oh, is this it? And it sort of felt like there were times in 2025 that we got those calls of, are
Okay.
we seeing enough breakdown? Are we seeing enough deterioration here, there, and the like? So I think there are quite a few people that would say and be surprised that we're at all-time highs. I think a lot of our research has dictated that that strength has just remained for most of the year.
Right.
Has it been challenged at times? Yes, but it at the end of the day has emerged each time to really take over that baton in that leadership area. So at least seeing them sitting there for a third year in a row, another positive.
They're positive and still some of the most clicked on areas. I mean, you had SPY, QQQ, the two most clicked on ETFs or most accessed ETFs within a few clicks of each other. Looking at QQQ, I mean, talking about movement, right? We saw all-time highs kind of posted, at least on the chart there in October, pullback in November, reversal back up in X's here in December, set you up with support at 590. You would expect maybe some further support if we do get deterioration down in the 530 range, but you get a support level. You're not just on that massive stem like we were on for several months at that point.
Hmm.
Just, I mean, whenever you get such a significant stem, it's like, well, what goes up might come down initially at some point, right?
Yeah,
It doesn't have to go all the way back
and I
down.
think, like you were mentioning earlier, when we look at some of these charts, or if you're trying to provide context for clients, adjusting scales can be helpful in
Yeah,
that.
yeah, yeah.
And I mean, even looking at whether it's a sped up one or one that's even slowed down, but I just kind of sped it up a little bit to show that sort of breakdown that you saw in November. And I think that's part of it is, if you want to convey to clients, we saw a pretty, notable is using the word lightly run from May through October, we were bound to go through some consolidation. And here's where we saw it. We've ultimately rebounded off of that as we're closing the year out. So there's some positive pictures to be taken from it. I mean, I think this is one of those times where we hit a consolidation phase, got a little bit of a breakdown. Definitely just scared us, got our attention,
Yeah.
for sure, but has seemed to work itself back to the upside.
Yeah, I think dropping that down to like a 5 point chart, like you said, speeding it up a little bit. You see some support around that 585, 590.
Hmm.
That's kind of baked in there the last few months. And then you're looking down support 560, 555, just
Hmm.
above those prior all-time highs. I think those will be important areas to look toward if we do get more of a kind of we got a pullback already, but if we
Yeah.
get more of a correction environment, those are the kind of at least support levels I would look toward when we're moving forward. So David, we fit on a lot of equity stuff. When we're looking at non-equity stuff, maybe what what was the most clicked on non-equity related chart?
Yeah, even if we were thinking about including international equities in this conversation too,
That's
it'd
true.
still
Yeah.
be the same thing.
That's
Um,
yeah, weird. Maybe before diving in, I mean that was really surprising, and you brought that up before we hopped on here. No international equity representation almost at all throughout
yeah,
any of the top ten. Like people are just not clicking on those charts.
yeah,
Which I mean they've been on significant runs. We've seen periods of outperformance in the past. Pretty notable period of outperformance here. U.S. dollar continuing to be very weak. You would expect international equities to continue to do well. Other people were clicking on other stuff that was correlated to movement in the U.S. dollar, just not
right,
international equities.
right, yeah, and well, back to our point of sort of talking, what was the most clicked non-US equity chart? Gold this year.
Yeah.
That one might not surprise many people by any means. But even looking at the chart of
GLD
GLD as it
specifically. Yeah.
stands today, yeah, GLD being specific on that chart, we saw a return to a buy signal. Let's see, last week, I'm
A
imagining.
couple weeks
Oh,
ago.
a couple
Yeah.
of weeks ago, yeah, on
And on
that
that
one.
bullish triangle, it's a nice looking chart. I mean, it's a wide scale. Hit those matched all time highs that we got back in October. It just kind of sat there. Hasn't really seen a
Hmm.
ton of change. Silver's have been on had some good moves recently, but I mean, GLD up 60% year to date.
Yeah, I think at one point in the year when I was looking at sort of gold returns, you had to go back to somewhere in like the late 70s. I want to say it was like 78 or something like that. It may have even been in the mid 70s that you saw even remotely similar gold performance. So, I mean, it's been 40, almost 40 plus years that we've seen a year with gold showing this type of return. And I think to our point, that's been the haven where most people have fled towards if they're looking for alternatives, especially outside of domestic. It's been looking towards gold, precious metals. And GLD obviously was the one that everybody was looking
Yeah, I mean,
at.
most popular, the biggest, certainly by far. a very, very large ETF there. But I mean, when looking at the current technical picture, 5.6 near perfect fund score, right?
Hmm.
I mean, it's been on a strong run, like we said, up over 60%. But you have this consolidation point right now. It's relatively normalized from a weekly overbought oversold perspective, even though the chart's at all-time highs,
Hmm.
and weekly momentum just flipped back to positive in the past couple weeks. So that could be an itch. Just because we're up 60% this year doesn't mean we can't be up more next year. I mean, it's bad, up notably 2 years in a row at this point. Why not make it three, right?
Hmm. Yeah, and I mean, like you're pointing out right now near highs, but could even get a pullback towards 380, 375, and technical picture is still probably going to remain sound in many
Yeah,
ways. Yeah.
yeah, yeah, absolutely. I mean, as there's a lot of reasons why gold price has been going up. A lot of people obviously speculating about this reason, that reason, or the other. At the end of the day, we don't we care. We like to talk about it. It doesn't matter. It
Right.
whatever's
Yeah.
making the price go up is what's making the price go up. If the price
Right.
goes down, it's going to be another catalyst to push in that direction. At the end of the day, that's kind of part of the reason why we like looking at these charts. Is like, hey, we don't everything consolidates down into the price action, and it's going
Mhm.
to dictate what's going on. Price been going up, so
Yep.
that's kind of
Don't fight
remain
it.
with those trends. Yeah, as long as it's in place. But yeah, I mean, David, there's a lot of other stuff. Was there any other kind of things that you saw today? We've mentioned the international stuff. Like we said, silver down there a little bit further down. Some indicators that we get into a little bit, but other than that, I mean, I think it was a not a lot of areas that weren't surprising, and then some areas that were surprising on head end. Anything else that you were looking at?
No, not too particular at this point. I mean, like I said, probably the thing that maybe left me scratching my head the most was the lack of international equities as far as lookup this year. But I mean, like we talked about, I think it's folks have looked elsewhere,
Yeah,
look for other alternatives.
yeah.
Yeah, yeah.
But I think that tells you something too. It's up really notably, right? We've seen
Hmm.
strong performance from international equities, better performance for international relative to US. First time in a while we've seen that,
Right.
especially when both are positive.
Hmm.
Yet we're just not, people aren't checking it out. So I mean that could present some further opportunities. People saying, "Oh, we've seen the run, we've seen the run." People have you really seen the run if you're not looking at the charts? You know what I mean?
Right, right. Yeah.
Like that means maybe it has
Valid
some
point.
more leg room as we
Valid
look forward to
point.
next year. Yeah, a lot of stuff to look at. Definitely, I mean, with that, I think we want to thank everyone for tuning into us throughout this year. It's been a great year here at Dorsey, Wright. We appreciate all of you. Appreciate you, David. Appreciate you
Yeah.
coming on.
Glad to be on, glad to do this. It's been wild 2025. Hard to believe it's getting ready to be over. It's
2026.
yeah, it felt like just yesterday I was trying to remember to change the date to 2025.
Yeah.
You
Now you got
know?
to remember for
And now
2027.
I got to do it again.
There we go. We'll keep each other accountable for that. It's cool. But so thanks everyone again for tuning in. We'll be back in the new year to touch base with new action.